Traders, today was anything but boring. Tech stocks popped, oil names got smacked, and the Fed just dropped a headline that could shake up Monday's open. Let's break it all down and get you ready for the next move. Alright, so here's how the numbers settled on this Friday, April 11, 2025. S&P 500 closed down 0.32% at 5,162, giving back a bit of yesterday's rally. Nasdaq Composite held stronger, up 0.18%, riding high on another push in semiconductors. Dow Jones lagged, down 0.47%, dragged lower by weakness in financials and industrials. Biggest mover in the S&P 500. Nvidia again. It gained over 4% after a bullish note from a top analyst who raised their price target to $1,250, citing stronger than expected AI server demand in Asia. Over in the Dow, Boeing tanked 3.2% after the FAA announced an expanded probe into supply chain compliance issues. That's a weight on an already fragile part of the index. Now, on to the macro side. We got a fresh PPI print this morning, and it came in hotter than expected, up 0.5% month-over-month, versus 0.3% forecasted. That sent bond yields ticking higher, with the 10-year yield flirting back near 4.42%, up from 4.36% at yesterday's close. And here's the kicker, Fed Governor Jefferson made a surprise statement midday, saying the inflation trajectory remains uncertain, and rate cuts in June are not guaranteed. That cooled off the bulls real fast. Let's talk levels. S&P 500, the index is still above its 50-day moving average around 5,130, but today's rejection at 5,200 could suggest short-term consolidation. Watch that 5,100 to 5,200 range early next week. Nasdaq, sitting just under 16,400, we've got resistance around 16,500. But momentum's still strong as long as it holds above 16,200. Dow Jones looks the weakest. If it breaks 38,000, we could be looking at a quick test of 37,600 next week. Volume today. Below average on the S&P, but check this out. Tech led again, with the semiconductor ETF, SMH, posting its fourth straight green day. Unusual volume flagged in AMD and ASML, which both saw call buying ramp up late in the session. Energy stocks, though, got clobbered. XLE dropped 1.8%, and Chevron saw some serious block trades on the sell side. Crude oil dipped below $82 per barrel, partially due to easing tensions in the Middle East and a surprise inventory build. Also notable, consumer staples quietly rallied. Procter & Gamble, PepsiCo, and Costco were all up over 1%. Maybe a little risk-off rotation heading into the weekend. Alright, here's my personal take heading into Monday. I think we're in a bit of a tug-of-war right now, between those chasing growth and others getting defensive after today's inflation data and Fed comments. If we see any more hot inflation readings next week, especially CPI on Wednesday, we could see the market price out June cuts completely, and that'll hit growth stocks hard. That said, tech still looks like the strongest horse in the race, and unless we break those key support levels, I'm not turning bearish just yet. Watch for Monday morning sentiment to hinge on overseas market action and weekend headlines. If you found this breakdown helpful, do me a solid, hit that like button, subscribe for daily market updates, and drop a comment below. Backhand index pointing right. What's your outlook for next week? Bullish, bearish, or just confused? I'll be replying to your takes all weekend long. Catch you on Monday morning.